I want to bring in Brian Wesbury, First Trust Advisors Chief Economist, joins us now. You know, Brian, to a degree, I think what Ashley was talking about, the success of the home market. I mean, prices, they're out of control. I mean, the average and median prices near all-time highs, and certainly seems to have gotten ahead of themselves.
Yeah, we have fully recovered, Charles. You're absolutely right from the '08 big drop in prices. However, if you look at the actual price of homes versus rents, which was what was really out of line in the early 2000s that showed us we had a bubble in housing. It's not so out of line today. So prices versus rents, we have inflation, asset prices, and just in general, the prices of goods and services I expect to continue to rise. The final thing is I think the one thing that's hurting existing homes, which is what this number is today, is just low inventories. There's hardly any existing homes on the market, and what that means is that builders are really going to start kicking in to building, and we saw that in housing starts numbers just recently. They boomed last week. So,
we're going to get the month supply number soon, right?
Yeah, we will, yes.
The number,
yes.
Okay.
Right.
Because that obviously has been an issue. But even before this current inflation scare, Brian, you know, those numbers were rocketing higher and higher. And also new buyers. I mean, the new buyer level is substantially low compared to historic norms. Can we get there? There's some signs that millennials are starting to move out of their parents' homes into their own place.
Yes. Yeah, well, it's all happening. It's a little bit behind schedule, at least what I thought was going to be the schedule. But people are finally, it seems like, forgetting what happened in 2008, 2009, and finally having more faith in the housing market. We still see strong renter markets. That's where everybody went. But purchases are beginning to pick up. And I think this economy is going to be a lot stronger in the next couple of years. We're going to avoid a recession. So I think housing still has a long way to go before it's
Of course,
done.
Ironically, that rent inflation is going faster than anything else that I can think of. Let's talk about the markets here and some of these individual names, particularly these big tech names. They really have continued to do extraordinarily well. We've got the five of the biggest on our board here, Facebook, Amazon, Microsoft, Alphabet, Apple, all higher today. Brian, I'll ask you, and then I want to bring in Jack Howe as well to give us his opinion. Tech, can they keep this going?
Yeah, I think they can. I mean, obviously, these have run, the FANG companies, as we've called them, have run faster than the market as a whole. I think there's more value in some other places, but it doesn't mean that these can't continue to run. And the reason is this new technology. We live in just an amazing period of time. You know, while everybody's been so bearish over the last 9 years, and I know this isn't tech, but we've invented and perfected fracking. We've invented apps, the smartphone. I mean, the iPhone X it's 10 years old. This has all happened in the last 10 years. It's changing our world. It's boosting productivity. It's boosting profits and efficiency. And that's what drives the market in the long run. And I don't see why it can't continue.